When you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I wanted to bring out the 382 today in the S&P because we had a 300-point handle move. You can see from middle of the night, we went up 60 handles, down 90 handles, up 90 handles. I mean, at 250 points, you can see that was a 382 off of the low. If you expanded this out farther, let's just move it around a little bit, and you'll see today's action, watching how the 382 would operate. We'll get this out of the way right here. So you'll see if you blew that up. Going to get it up here a little bit more. You had that 382, then you had a pretty good sell-off here right on the opening, and as you'll know from your low here up to your high, where'd we stop at? Exactly at the 382 again here, 60.42. Now we're going higher, and as you can see this on the daily, we are just a heartbeat. We're above the 786 as we're speaking right now. There was at 6077 at 6081. So that's pretty much it. This was the head and shoulders that I was thinking was going to be working today, but with the action that we had here over, this was Sunday and Monday, that you can see here, once we broke above that, that told us that we're going to go higher. That breaks down the theory of what we were looking for in the stock market for comparing it to 1929. However, I did a couple other comparisons, and this one is from, this is today's. I'll show you where we are. We're right up in this area right here now. We're a day past this, so we are up in this area. We're not quite above that, but we're right about here. This is also 7 days up. Oh, 7 days up tomorrow in the SPX. If we go back to 1987, and we'll take a look here. There's where we were on October. This was August the 25th, harmonic convergence. We made a big ABCD stopping on October the 2nd. And between October the 2nd and October the 19th, the market gave back 30% of its value, 16% on one day, which was October the 19th of 1987. That is a possibility, but when you put it into probabilities terms, it's getting less and less probable because it's going up a little too much. What I was looking for right here was a 61% retracement, and we just hit the 78% level in the S&P. Now, we might even take this high out, and if that takes that high out, that is going to be very, very interesting because that means it breaks all these Fibonacci sequences down, and that means I have to reassess why this one that has been so perfect didn't work. This is what I thought was going to happen. You notice here, this is what it looked like. See, here's where we were coming in today, but we did go higher, all right? We went lower first, and now we're higher. We've taken this out. So we have to say that, yeah, you have to, and this is the SPY, and the SPY is trading above 600 right now. So that tells you that that head and shoulder that I was looking for didn't work. Now, maybe this is going to be the retracement up 7 days, possibly. That I don't know, but I have to wait and see. All I know is that this Wednesday is going to be a really big bonkers day in a lot of these things. However, we did have a couple of them pegged pretty good last night. When I sent out the video, I'll get this up here. In the crude oil, let's get this up here because this was a really good one for us here. Well, that was the 8 minute. We'll move this over. You can see here, this is where this was the 19th, if you remember. And then here we were on the 20th. That was exactly at the 382 of the high, folks. Just move this, get this out of the way. We'll go down to a 13 minute. It'll show it pretty easily, I believe. And there it is right there. There's your 382 retracement with an ABCD format coming right off the high. And that's what, well, let's just draw it in the way it should be drawn, Larry. Go from this high right here, which is the highest. You came down. There's your ABCD. Shucks. Thing is so darn sensitive. Hold on a second. We'll get this back here. There's your A leg is right there. There's your B leg, C leg. There it is, a 382, just a tiny bit above 382, and then bang, and down it goes again. What does it do again? 382 again. So it's been following that sequence all the time. So, and you'll notice that these moves are almost exactly equal. From this high up to that high, you'll see that market right there. What did it do? It repeated itself again right there, and it's spot on. And if we measured it from the high of the day, right back in here, where did it go to? Exactly to the 382, and is now trading $1,000 under where we thought it should be. So that's still moving down. And remember, we looked at this with Mike Moore last week, and Mike was saying a strong probability of a top up in here. Now we're down 3 days, and it's coming down pretty good. There's the 382 from the low we made back in October. This is going to be strong support, in my opinion. That's at 74.19. That's down another 1,600 points, or $16 in crude oil. Very, very interesting. Now, anybody ask me, am I looking to put a position on? Yes, folks, I am. I'm going to show you this one right here. This is the Dow Jones, okay? Now, I'm doing this because it reminds me of what we're looking at. There is no head and shoulders here. You see, we've broken through that shoulders, but we are having a 61% retracement at 44233. I'm going to give it 44222. The reason why I'm doing that, because this is the Dow Jones, okay? Now, if my idea is correct, and this is actually working the way that I think it is, that's it right there. 7 days up, exactly at the 61% retracement. I mean, I have to do it. There's no other way that I can do it. Now, this has the head and shoulders, but this year, the head and shoulders wouldn't be there, but 61 would be there. 618 would be there. So I've got to do that pattern. The risk is $500. The profit objective on it would be more than 6-1, I believe. So that's what we're paying attention to. And I could be totally wrong. This might be a market that's going to go up forever. And if it does, you know, it'll go up without me for a while, but eventually I'll see that I've made the wrong decision and I'll finally get back in. But right now, this is nothing more than a bear market rally. If you'll remember, let's get this up here and talk about this, because we were talking about Tesla the other day when we were on the show here on Friday when it was trading at 440. I want to get this up here because someone brought that to my attention. They happened to do that, and it worked relatively good. We'll get the half-hour chart up here. There's where we were with Tesla at the 440 level. Remember, that was the 61% retracement on the high from right back here. Okay, we're going to draw that in. And you can see it's had a, just made a 61% retracement just now. Hold on, I can see that. No, it's a 61% off of this one, sorry. But this is one of the reasons why we were doing it, because it had a perfect A, B, C, D here. There's A, B, C, D right there at that 440 level. And it hit 440, what was the high? 439.74. And I believe we were looking at 439 and change. But look what's happened now. This is intraday. Now, we've had a pretty good break here in Tesla. We went from 440, dropped 35 points, and now we're rallying back, and we're almost at the 382 level as we just hit it just a minute ago at 417. So let's keep an eye on that one just for kicks and giggles to see how this thing's unfolding. Okay, so let's take a break, and we'll be back with you in just a moment, folks.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th, for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, switch over to the Treasury bonds. Here was our big low down here at 110. There was your first 382 retracement there at 112.06. There was your second one right here at that level right here. And then if you looked at from that early morning low right here, you'll see this is the first time. Went right back up to the 382 again, so it's still acting very bullish. However, with this one here, it just really didn't do very much. So we start getting below here. That tells us that this ABCD pattern was most probably this drive 1, drive 2, and drive 3 pattern right here. Now, what we'll do now, we're just going to go down to a 4-hour chart and see if it tells us we might be at some place really interesting. So if you pull this together, and you pull this together, there it is right there, 114.13, folks. This would be the 3 drive pattern that we're just talking about right here. There's drive 1. Now remember, this thing is much, much bigger than the stock market, folks. So that's 114.13. That's a handle from where we are right now. So if we get up there, you know, that tells us it's going to be really strong resistance. This is the first major ABCD in a bear market. There's the bear market. There's your first ABCD coming in right up here, 114.13. There'll probably be some stops right in that ballpark, but that's what you'd want to be watching. Now, so far in the last day and a half, over between yesterday and today, you'll see this little pullback. And what we were doing, we just pointed out that little pullback there was also an exact 382. So there's a chance that because it went below it by a few pips, but it's still got a chance to get there. But this is going to be really strong resistance up here at 114. There's my opinion again, 114.13. Watch that. That's a 7-day rally, folks, in a bear market. That's been rallying 4 points on 4 points, and that's a $4,000 move on a margin of 6,000. So that's a really good return on that. Now I do not have a position in that. In fact, the only position that we'd had was in the let's say it again, Larry, was in the the corn. We got stopped out on Friday, and then we were in the Russell, and that got stopped out yesterday. And so we're just waiting to see what happens next. I haven't put another order yet out professionally on the website, not on the website, but on the internet through my videos, because I can only send one a day by Google. So tonight's I'll be watching to possibly sell. If it hasn't reached it yet, I'll be looking to sell the Dow Jones. Let's get up here and see it. How far? We're not very far away. We're only 50. We're going to hit that today. Yeah, with an hour and a half, with 2 hours and a half to go, it's probably going to get there, maybe go even a great deal higher. You see, the 50% stopped it for a very, very short time. The 382 did virtually nothing, but this is going to be a big one because we're up 1, 2, 3, 4, 5, 6, 7 days, just like we were back in, when? Back in 19299. So that number, folks, I'm going to put that in here because I feel strongly about it. Like I say, I'm often wrong, but never in doubt. 44222. And let's try it again, Larry. Yeah, 44222, and your stop would be 44322. You're going to risk 500 large, folks. $500 is what you're looking for. That'll get the Dow up about 600 points on the day, coming into the last 2 hours. But that's a 618, and you've got to try that for several reasons. One, it replicates what could be happening from 1929. Odds are against it because now we have the savior has come into the company or to the country, and everybody is jumping on the bandwagon. When I saw Michael Bloomberg do that, folks, I fell over. I never thought he would ever. He gave $1 billion that she would lose against against Biden. He put $1 billion up in 2020. Okay, that's what we're paying attention to with that one here. And now we want to check cattle. We had a trade going on in cattle. If you haven't looked at it today, so I think we're still in it. Let's just double check and see. Here's where we are. Get the 3 hour hip here like that. Yeah, we're still in it. Gosh, it's going nowhere. It's just going sideways. We sold that at 198, and here it is at 197.34. And hasn't really done very much. The high today was 198.25. We sold it back here, so it's still in vogue. You stop now. You're only risking 199.25. 198.25 now. If it makes a new high on the day, then you'll take your $400 loss and move on. But that's what we're watching as we're looking at these things unfolding here so far today. Okay, those are the main ones here. Now we want to talk about the currencies. I'm going to take some more time here when we come back from the break, but we'll start out right now. And we've had some big moves, folks, and they followed really. Let's look at Bartolone's Australian dollar, and it's moving pretty good. You'll see it's back up here now. We're up about 100 pips, just about exactly 100 pips. Remember, on the long-term weekly, Bart was buying it right there at 61.88. I thought we were going to go a little bit lower, and so far we're having a 2-week rally now. It's rallying about $1,000, so that turned out to be a good trade for him. We were not in that. Now, we were in the British pound, and then we were got stopped out of the British pound. Let's get this. Here's the British pound right now. This is where we are today, and you'll notice here all we did. We went to the 382, then we went up to the 50%, and then we backed off. But, and this is what I think is important, folks, we back off with the second. There's your first A, B, C, D pattern right here. Now, this is the second one, A, B, C, D. What you need to do is you got to go back to your low and measure it. So you'll be watching. There's your X leg. There's your A leg right here. There's your B, there's your C, and it's coming in right there at the exact 50% level of the low. It goes below the 382 by a hair, and looks like it hits the 50% spot on, and that is an A, B, C, D. Let's just see how close it is. Oh, I can tell you it's close because this is easy to figure. There's A, B, and there's your CD. It's how close is it? It misses it by more than you might think. Well, it misses it by 60 pips, folks. So it hits the 50%, but does not make the ABCD pattern right here. There's A, B, C. Oh, it's drawn wrong. Just a second. Hold the presses. There's your AB leg right here. Okay. We're going to clone that, bring it over here. There it is. All right, 193. This misses it by 100 pips, folks. That's a lot. So there's nothing you can do about it. But after it started this morning, the See, in this little pullback here, remember this is a 3-hour, hour and a half retracement. We'll go down to the 13-minute just to show you how these numbers will help you out. There's what we're talking about right there. Market backs off. Where does it back off to? Just see if it's 382. There it is right there, 382, and there's your profit objective on that. Would be up here where we are right now, 123 and change. Now, we need to look at the, we got time coming up here. We'll try the Japanese yen here, and then we'll get back when we come back from the break. We'll talk about the yen because that had a pretty big break too, and we were looking to move down to about 155, 154, and we're almost at 154. Here's the 30-minute chart on this. We'll go to the hour or 4-hour, and I believe we're in the break mode now, so we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're going to take a look at the Japanese yen right here. As you can see here, we've made a 382 retracement early this morning. Looking at this on the long term, we were watching it up there at the 786 level right here. Looking at that on the daily, we'll get there and you'll be able to see it. There was the daily 78% level, and now we're back down to this level right here, looking like we're moving a little bit lower. But how much lower? We're right at, let's just make sure we refresh this for the last few days, and we've went down and hit the 382. That's what we've done, and we've held it, and we're down, wow, 7-8 days at a 382. That's not a very bearish sign, folks, so I wouldn't get too excited about being short this one, folks. We made a little bit lower low here right at the 382 and then snap back above it, so I think that's probably getting ready to go higher. As you'll notice, the last time we had a major low here and the market rallied, we went just a little bit below the 382, between the 50%, there's 38.2, there's 50%, and then it had its turn. So we've done the same thing here, a little bit lower. Now it's trying to rally. We look at this on a smaller time frame. We had a move up in here. The pullback so far has been, looks exactly around 50%. 61% retracement, so that's holding up relatively well. It looks like we're getting ready to move. Remember, folks, we did make this ABCD pattern right here. That was back on the, well, that was Sunday night on the 20th. Wow, that's a big swing. Actually, it didn't quite make it. It misses it. Oh, it misses it by 54, misses it by quite a bit. 20 pips isn't too bad for the dollar yen. But anyway, that's what we're watching here in the market now at this time. Okay, alrighty, let's move over here and get this out of the way. Now this is one of the MAGA stocks, Broadcom. You'll notice it's made a big retracement now. There was the old high back there at 248. We're at 242 right now, and it appears that over the last couple of days, that's all the market's been doing. It comes up, pulls back to a 382. Up, that's 50%. I can see that right now. There's your low. There's your high right at the 50%. That means this is where we're going, and that's right into that area. Taking out these stops, be around 250, and it's 242. Well, almost 242 right now. So that's a very interesting stock pattern. Now, we need to look at Apple, because I saw Apple was down. I found that hard to believe, because everything else in the whole world is up. So we'll get the hourly chart here on Apple, and it is still down, and they're still beating it up. It has taken a turn for the worst. There was the little 3.8, 50% off of that move right here. It never really gave you a 382 over this 5-day move. See, it really didn't. From your high down here down to your low, you see it missed the 382 here by about $3. So that didn't do it, but this one hit it pretty much right on. This was run right out of the, I was going to say Floor Trader's Handbook, but that's correct. There it is right there, exactly. And now we're starting to break down. We're probably really near the 382 pattern on the whole thing, but it's still a bit early, you know, to say that's going to be the case. All right. Now, one more stock, and then we'll get back to the commodities, get this one out of the way, which is Apple, and get Avco out of the way. And now we want to take a look at BlackRock. Everybody's talking about the greatest hedge fund, what do you call it? Not manipulator, but hedge fund operator in the business. There it is right there. You can see it's had a pretty big break from the downside. We went from 180 back here on December the 11th, and then down hard, and then the rally up, and you can see here that we're holding that at a very strong level. Here's a perfect example. There's your ABCD leg right here, and if you just use your common sense Fibonacci tool for your X, there's A, B, C, and D, so it misses it by about 11 pips. So that tells you that we're still heading higher, at least for the near term. But, you know, we didn't do much today after gapping up quite a bit. We gapped up about, wow, that's a big gap, about 15 points. We're still up about 7, but we gave most of it back. That's not a good sign. Let's see if that would have been anything, just for kicks and giggles. Take the last high back here. See, it looks like it's exactly 50%. Oh, it's more than that. Oh, it's almost exactly. See, it made the higher high here by just a little bit, and now we're starting to back off. So pay attention, folks. This could be a really good setup here in a day or two if we can hold these levels above 945 in BlackRock. So that's the one we're watching at BlackRock today. So live every day in an attitude of gratitude, and may God bless. And next thing we're going to look at now is the silver. We'll get this up here. Had a lot of interest in silver early this morning. Here it is right now. And you'll see it's had a pretty good run to the upside. We'll get this up here, take a quick look at it. We had several nice corrections. We had a correction right here in the middle of the night just a couple days ago. And now you'll see from this high right here, this low right here, comes in right at the 618, so that's a good place where we would have been buying, and that's a pretty nice move, up 1,600 down 1,000, so it's holding up relatively well, and it looks like it does want to continue higher, folks. So if you look at this real closely, and I do mean real closely, you can see multiple ABCD patterns forming. ABCD, ABCD. So we're going to draw those in. And so you can see them. There's your high, there's your low. Put that in there like that. That's around 32, about 32 and a quarter is what it is, it looks like. And if we take this as a regular ride, all righty. Yes, sir, that looks like a completed ABCD to me here in the silver, so I would be looking to be short that, much like I was looking to be short the gold. So we'll see if that's going to hold up. Now let's get these out of the way here because we're not going to be doing any stock trading around this time. So get this out of the way. And now this is hanging in there. Okay, this is the E-mini. E-mini's got up to the 61% retracement, and so far has held it right there at 60.77, and their number is 56.83 for the little green box here at TFNN. All right, now let's take a look at the gold market. Gold was all over the map today, folks. It was rocking and rolling, depending upon what your feeling was about what was going to happen next. Let me do this, get this window cascade, and then we'll be able to catch the gold market without too much trouble here. Oh, well, when you put something in the mind of a commodity, well, the reason why is we do not have any, let's get this out of the way. Come over here and we'll put out, we'll be right back, folks. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I just wanted to get this up here and take a look at it. We have had an 1,100-point rally here in 3 days here. Let's try it again, Larry, and let's try it again. It's 8 days. I believe, for some reason, when I looked at this on the daily, I believe that number was 44. It's not. That number is just different than what I just printed out. I don't know why it wouldn't be the same, because it's the same contract. I don't know why it's not. So cancel that order. Let's get this refresh out of the way, because we're already above this by about 100, almost, well, it is 200 pips higher than the Dow Jones on this chart right here. And that was not what I was looking at. I think I had this saved here, but let me double check just to be safe, because I like to see that it does when it holds up like it should. But again, there's no way that I can tell from this that's what I'm looking for. So let's get this back up here now and move this around a little bit and see where we are with some of the others. You'll notice that the soybeans are still working higher, gold's continuing to go higher, and the S&P is still up, and the NASDAQ is still up. This market here in the this would be, if you were to sell one, the Nikkei would be the one to sell. The reason why, it's much weaker than any of the others. But there's your little pullback here this morning. There was no ABCD here. It looks like there was, but it's really not. The stop's exactly at your 61. Rallies up, stops exactly at your 62. And your 382 would probably be down in here somewhere, is what I would be watching as we watch these unfold here today. Let's take a look at the wheat market, folks. I'm still very friendly to wheat, but we should have some luck here on the downside, and we'll get this up here a second. Where is it? That's it. There we go. Okay, it's my good friend Dr. Earl. There's where we are with the British pound right now. How did that pop up? I was doing something together. We'll do it again. It must be the reason why I did it. There's the ABCD right here this morning. There it is. There's your low. There's your ABCD. These are the ones you can do at home. Practice with them in the car as long as somebody else is driving. Right on the money. And now we're getting ready to take these out, which will take us up here to the 141 level. And that's where we look to book our profits. Oh, excuse me. And also try to make some money. So that's what we're paying attention to here with the British pound and also the Dow Jones and then the Japanese yen. Let me clean some of these out so we've got a little bit of room to work with it here. And there's where we are. Next one we're going to take a look at here is the NASDAQ. It had a pretty big break this morning, right to here. You'll notice there's the market broke off. So we're going to check and see how close it was to a 382 off of one of our big lows way back here. So let's take that one. Might be a little too much. No, it goes right to it. There it is, right there. There it is, right there. And that's also 786 of this move right here. High, high, and buy at 47.41, 550. So that's a long way, 250 pips from where we are right now. So you don't want to touch that because there's not much time to do that. That's the main reason to keep your chips close to your vest, and you never have to worry about anything. All right, folks? Very, very important. Okay, now let's see why this was so important with the NQ here on Friday. There's your low right here. There's your high right there. I mean, how does he know it's an exact low, folks? It's dropping like a rock. It stops and bang. Next thing you know, it's a strong, trendy, secular market. And that's what they got, and that's what they were happy about. They didn't like the colors, didn't like the upholstering, but the car was very comfortable. And so they put in a new upholstering, a new car, and gave him the car at a big discount. So he's a happy camper. That's one of our friends from California that's over here visiting because their home has been lost. Fortunately, everybody was out of it, if there is such a thing as, being out of the office when you have something like that happen. That's a pretty tough one to look at. I've been asked to take a look at the Treasury notes. So we're going to take a look at the notes right here. IYT, move this down a little bit. There it is right here. Remember, this is 6 times bigger than the stock market, the note market, folks. And there's where we are right now. All right, and you've already seen this in the Dow Jones. So we do have an ABCD structure forming. You got your X way back here. There's your A leg right there. I'm going to move it over. And there's your CD leg, and that should bring you right up here to right around 72 low upper here. I'll usually get this right sometime, folks. So we'll wow, I just typed in Tommy O'Brien's name. Sorry about that. Well, we don't want any results from where we are right now. So blew up this a little better. You could see it that we have an ABCD pattern in here at the same time, but we don't have any evidence that she was driving or anything. So yeah, that'd take her back into the bad lines, which is, wow, that's only 10 pips away. When you consider all of this and part of this, you're talking about a serious piece of work coming out of the print shop. Okay, that's what we're watching. And you can see there is another one right behind it. We'll just clean that out. And there's the other one coming in right here. There's your A leg, B leg, C leg, D leg. Wow, almost there, 71.92. We'll put that limit minder in, and when somebody comes on, we'll be able to double check and see if we got it. And then we will have a partay. All right, let's take a look here now, folks, at the gold and silver. We've already looked at those. Let's take a look at this is the euro. Now you can see the euro here has, there's your shoulder head, and your right shoulder is going to be right around there. Wow, I thought that would be, because that should have collapsed on its way up there. There was no food down there. Now it's, if you be a little careful sleeping tonight, you might get a little hungry. We're 7 days up in this run, folks. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. Right there, and we're right at the exact 61% retracement. I like to do these with about 30, 40 yards ahead of you, as opposed to the, lineman that weighs 350 pounds cannot, well, we think he cannot. I got to turn this off just a second here. Just take a look here. All right, that's pretty much what we're waiting to see here. And what's the next one we're going to be looking at? How the stock's doing. Let me pull that out here for a second. Hold on, folks. I want to get this up here so that I can get everything corrected the way that I want to. So take a break here. We'll be right back. Got 50 seconds. I don't want to take a break. Let's take a look at one other stock that's been acting, which is Caterpillar. CAT, get that right there. Caterpillar should be doing good because they're putting a lot of farm stuff in there. And as you can see, it is doing good. Somebody knew earnings was coming out on this, and boy, what a run it's had from the 10th to the 1st of October. A great deal. Let's take a break. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I just want to get this up here and show you because I have some data in here that's not correct. Do not try to sell this here at 44222. This is different data than I had on my other charts, so something's not updated. I don't know what the problem is, but when there's a confluence of numbers here, when in doubt, stay out, and we definitely want to stay out because we're up above here. See, there was the 61% retracement here. We backed off and now shot above it, but there's no other sale, and I've got it. It looked like when I bought it, or when I took possession, it would be 44,222. But when I look at it now, it's way above 44,222. There's a 61% retracement. That was a low here. Then we backed off 500 points, and then it took off. So that's not a good trade. Do not put it on. When I see it, I will be back with you and we'll see how it works. But that's not correct, because there's the number right here. Get this up here and take a quick look at it here. There's where we were, right back in here. Now you can see we're still going higher, so there's nothing really that we can do about that. We're still going a little higher in the S&P. Same thing in, well, the others have slowed down because of injuries in the, oh gosh, what do you call it? My mind is snapped, folks, and I'm not surprised considering all the things I've been thinking about over the last few hours. The main thing is, folks, we do not have a position. Do not put the order in. I said wait for an ABCD counter trend. We have not had that, so it's better to wait and be thought a fool than to act and be proven that you are a fool. So I'm not going to be foolish. I got stopped out of the Russell at break even, and now it's going higher. We'll have to wait and see, one thing at a time, and then we'll know where we stand. But right now, this is wrong data, and I don't trust it, and I don't want to trade with wrong data. Now I've got another, we'll see you on the flip side tomorrow, folks. May God bless.